Aloha, aloha, aloha. How's everybody doing? Hope everybody's having a great day. This is 50 pips here doing a little review. 0806 2014. Not making trade calls or recommendations because only you're responsible for the trades you may decide to take. The fact that you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the blog. So what's going on? What's going on? So going into this week, keep in mind that we have a couple of bank holidays on Monday. So I think it's Australia's off and Switzerland, France, and Germany are off, so we could have some subdued flows, especially in the overnight session and going into early Europe session. Okay, then as far as data, main things to keep an eye out for, it's going to be a week which is mainly focused on Australia, New Zealand, and Japan with some, in China with some of the data that's coming out. We've got something out of the UK which will definitely be interesting for cable, and that's going to be on Wednesday in terms of the unemployment claims and the claimage count. And then it's all really, I think the main event risk is also going to be that RBNZ statement and rate decision. But apart from that, nothing, business as usual. We do have a BOJ press conference, so we'll see what happens. But I mean, it's nothing major coming out in terms of Euro or cable, right? So going into the week, what to look for? I'm going to try and cover a couple more pairs we did last time. Let's just start with so in terms of ES, there's nothing much going on in terms of the equity side. We said they keep on pressing higher. We'd expect them to keep on pressing higher. We don't want to stand in front of them. We're looking for tactical opportunities to get short, but really right now it just looks like it's a melt up, and it's not something you want to try and step in front of. There's a lot of ways to try and find new resistance levels, but we're not huge fans when the charts are trending at new highs, and if you look to the left you've got nothing to guide you. I prefer not to go into any technical analysis because it's just a bit more complex, and I don't think it's really that interesting for a lot of the newer traders. What we're going to focus on, so here let's take a look at gold. What's going on gold here? So we're hovering around this 1250, right? And as we said, we were basically witnessing what we call a potential range shift, right? Well, first of all, we're in this big bottoming pattern here, and the range we were looking at was that 1350, 1300, 1250, right? And this was the pivotal level. Once we came down, what we're saying is if we start to get traction below the 1250, what could be happening is a range shift, right? Currently, this is the range, and if we start to get action below here, then we could see the market shifting the range and the market trying to take a stab at those 1200s, right? As it looks to me, it looks like it's trying to base here, and especially with the way equities trading, I think we should see this trying to take a little step to the upside, and those 1300s are going to be capping. So right now 1300s high, 1250 mid, and 1200 low. That's what I'll be looking at in terms of the week. I still think that ultimately this will resolve itself to the upside, but right now we'll have this 200 DMA capping to the upside. You've got that 1200 capping to the downside, and we're right here in this chop zone. So look at closes above or below that 1250 as pivotal, and it's giving you an idea for what direction the flows are going to come in. And in terms of crude, do we have crude? I think there's no, well, yeah, crude. A lot of people are asking about crude. What's happening on crude? So basically we've actually got this cross here, so the 100s back above the 200 in terms of the daily moving averages, simple moving averages here. So basically we broke to the upside, and it's just trying to look for direction in this descending trend line in this whole area. Our outlook hasn't changed really from the weekly. Again, you can look back at previous recordings. We discussed the whole look at the weekly as a big structural cycle low, and we're looking for this to press higher to break new highs potentially on vis-a-vis last year too. So right now this move, we're looking for a move back into 105s, break above 108s, and then so forth, so on. So right here it's looking for direction here, and watch this. If we're going to press lower, this is clearly going to be the big support. The two moving averages to the downside, this 100 and the 200, this is going to be clear, and to the upside the 105 is going to remain pivotal. As we stand here, the way we look at it is it's kind of like mid-range between this base resistance and this base support. So I don't think there's a lot of edge in engaging here, simply because the risk reward between these two big support and resistance areas is simply not there. So unless you're managing an open position, if you're managing shorts from here, clearly you've got, it's looking good as long as it holds below the trend line. As long as you get daily closes below the trend line, it's looking good for a move back into this 100 200 zone. If you're looking, if you're trying to manage longs, well, as long as we don't start off these lows here, as long as we don't break below here, clearly it's under pressure, but the trade's still on. So we'll just have to see. I don't think it's particularly interesting where it is right here right now for new trades. In terms of a lot of people asking, because we posted this chart, we were talking a lot about the fact that that 200-day on USD CHF was going to be pivotal, and we had a lot of protection around that 90 level. And again, through the volatility this week, very classic, bam, we clipped all the stops and then we reversed all back down. Keep an eye on these 89.10s this week. If we get daily closes below, we could easily see this trying to accelerate lower into the 88.40s, 88.00, and we consider this as the base support. However, closes above here, it could try and regain that 200 DMA, and if we get a close above that 90, this is going to start to look very bullish, or at least for an aggressive press back at least into those 90.50s. So we'll have to see, basically how the USD does this week, but clearly a daily close above that 200 would be very important. Ultimately, we're not huge fans of this in terms of big swings, simply because we expect, the SMB to be very protective of CHF and not let it strengthen too much. So we expect this to just continue choppy trading and, if anything, move up. So we'll have to see what happens here. In terms of AUD USD, what's going on? So basically, it's just the rotation higher is in play, right? So we've got this base is holding. A lot of people are trying to scalp this to the long side, 15-20 pips for scalps to the upside, and now it's pressing into this resistance. And we talked about the 93.30s being pivotal for a long time, right? So the way this is trading, clearly the shorts are trying to keep pressure on here, but right now it looks like the rotation is in play. And again, we do have a lot of stuff coming out of Australia, coming out of New Zealand this week, so it'll be key. But if we start to get daily closes above this 93.30, then it looks like price will be set to try and take a stab to the upside. It's looking pretty constructive to the upside, and those highs will definitely be attracting. So that's what we're looking at. Pivotal 93.30s, pivotal for action. Closes below, well, then those lows will come into play. Closes above, well, then it'll be looking to try and retest those highs. That's the way we're looking at the chart right here. Kiwi, what's going on Kiwi? So right here, big pivotal level. So again, it keeps on rotating to the upside, and right here we had a pure retracement. Right off these highs, we came back down. You've got these two moving averages, so the 100 and the 200 and the 50 back of the move from lows to highs. What's happening? We got reaction right at the 50 back. So very interesting long trade here, long the 50 back with stops below this 61.8, giving you some room to wiggle room behind the 200 DMA. So interesting level. So right here, the way this is trading, and again, heads up, because we've got rate decision this week, so it's clearly going to be make or break here. After that rate decision, what we'll look at is daily closes above 85.00. We'd expect this to try to rotate back up into 86s, 87s, and so on, completing the 123 extension, which is coming in at 89.50s. However, after post that rate decision, daily close below the 85s, then we'd expect pressure on and the market to attempt to take a stab at this 200-day 200 DMA and to take out the 83 levels. So, broadly speaking, that's what we're looking at going in here also with that rate decision. EJ, a very nice rotation. We were talking about this all the way since we made this little attempt to break lower, clip some stops here, held the 200 DMA, and what we said here, we're looking for this as a base to potentially move back into the shaded box, especially once we got a daily close above this basing pattern. We looked at even higher odds that this was going to rotate higher. So we got the daily close above, rotated higher, little move down, took out some weak players, bam, closed at highs. So right here, this is looking like it wants to move back into the 140.90s. And again, this is going to be the big pivotal level for the week. So let me just clear this up, and the way we're looking at this, it looks like market's going to try to continue to move back up into that level. Daily closes below, be some pressure on to try and move back into that 200 DMA. If we get daily closes above, well, then we expect this to continue to gain traction to the upside and try and make move even to the 142s, 143s. So clearly that's going to be the line in the sand or the big pivotal level for the week. What's going on USD JPY? Very similar, right? That Positive close on the daily of that 200. The way we're looking at this very bullish for a move back to test this descending trend line back into here. The 102.60s, 102.50s, whatever you want to call it, pivotal going into the week. You see that offers that were coming here to smack this down and hold it are still present, and they're still trying to do their job by holding it down. So as long as it it holds below this resistance zone, then it has a chance to try and move back into the 101.80s. But if we start to get daily closes above here, then we'd be looking at the 104s. So 104s to the upside, below 101.80s as support. Gold, we did CAD completely, you know, very uninteresting, and it's stuck between these two moving averages. I just don't think there's a lot of edge here. I mean, you know, some people could have tried to trade here, this kind of double bottom here, but I just don't think there's a lot of edge. It looks like it's trying to rotate back to the upside. I think unless we start to get daily closes outside these moving averages, it's not a particularly interesting trade. So for me, this is typically something that would be sidelined and just waiting for some more interesting opportunities. What's going on cable and euro? Cable, again, very nice action. We talked about, we had these two boxes on euro and cable, right? And basically we talked about the fact that cable had been trading stronger than euro. We had the ECB coming out, which was likely going to be very volatile. So again, the stronger pair was cable, and we expected cable to base and have a more aggressive reaction to the upside. So basically we moved back down into the box. We've been talking about this box all week, and again, those lows, and we said as long as these lows hold, we expect this to rotate back up into this whole pivotal zone, right? And because of the bottoming pattern, we expect this to break to the upside. So right now, going into the week, let me just flip onto this other chart. You can see that the trend to the upside is still firmly intact on cable, right? Still firmly intact. So what we're looking at is daily closes above the 68.40s. You can call it 68.50s if you want to confirm even more traction to the upside. As long as it can't close above that level, then it could be a bit tricky. So we'd be waiting for that for the data to come out and look at that day as the key day. So after the data comes out, look at close above 68.50s. Very, very bullish for a retest all the way back up into the 69.90s, 170s. We've been talking about the 171 for a while, and after the data midweek, you know, if we get a close below 167.80s daily close, we'd expect it to try and come back down and retest this book. But right now it's still looking fairly well bid, and it still looks like the path of least resistance, at least into Wednesday, is a little bit moved to the upside. That's what we're focused on. Euro, a lot of wheeling and dealing into the ECB. Again, we've been talking about this for a while. We said you'd have to be from Mars, and even then, you know, to not know what the market was expecting. Basically, market selling off about 450, 500 pips on the expectation that the Draghi was going to do something. I don't want to get into the details. We don't like to talk about fundamentals here. This is pure text, but basically market sold down aggressively on the expectation that Draghi was going to do something. When we came into the press release, Draghi did exactly what the market was saying and said it's probably not going to do anything else. So not surprising, you know, market priced in the move. We got the move. The only logical reaction would be sideways to retracement back as shorts covered some of their gains. Again, what a lot of people and what a lot of newer traders, I think, struggle with is they don't understand necessarily that the market is living in the future. The market's not necessarily living in the present or the past. The market is always pricing in what is going to happen. So today's news is already old news unless it's significantly different to what the market is pricing in. And, you know, that rate decision, so the rate decision and all the policy that ECB decided to implement is a great example of that. So back to text and not rambling, what's going on? So basically we came back down, hovered below the 200-day moving average just ahead of this important support. We came into the rate decision, and the policy announcement, bam, come back into support, cleared some weaker players. Again, shorts taking profits, longs coming in, holding this base support. We've been talking about the 134.70s for a long time. You know, we said this was the big pivotal level. If we start to get a daily close below here, especially on ECB, this would be very aggressive. We'd expect the move back into 133s, 132s to potentially gain very aggressive traction, right? So we move back in here into the support held, and then what we were saying, we talked about this on Twitter, we said you might want to keep an eye on the daily close on euro, right, all the way back up, closes above the 200-day. So right here, the pivotal zone, and you see it's trying to hold here, are these 3660s. So look for that in terms of short-term direction. Now keep in mind that all the way back into those lows, you know, the market can continue to try and test those lows, try to test that support, and any move inside this range, the whole Thursday, Friday range, is what we say, you know, don't get confused by velocity of move inside range unless we get a daily close above the Friday high, or unless we get a daily close below the Thursday low. It's much to do about nothing, right? It's a bit far west, wild west, just choppy inside here. So that's what you want to look at short term. I would expect a lot of people who are uber bearish euro now, and a lot of the houses will start to come out with buy recommendations, so we might get some more upside traction. In terms of techs, what I would just focus on is pivotal level for the week, 136.60s. To the downside, base support is going to be Thursday lows. To the upside, it's all going to be about these 37.30s that are protecting the 37.77. So on any aggressive pop, I'd expect the shorts to come in and reload at 37.30s, 37.70s. This is the reload zone. This is probably the reload zone for the long. So these are the big levels to keep an eye out for. But if we get a daily close back above the 137.70s, then I think extremely high chance that we go all the way back up and we retest those 140s. At the moment, any close even above the 100 DMA is going to be very bullish. So I'd expect at least coming into the beginning of the week to still see buyers emerge on any dips on euro, and some pressure still to be to the upside. Okay, so again, I hope that was interesting. If anybody has any comments, any questions, again, don't be shy about hitting me up on Twitter. And again, I'm wishing everybody an awesome rest of the weekend wherever you may be. Don't forget, we got a bit of public holidays across the board tomorrow morning, so the first flows in London could be a bit slow. Have an awesome time. Thanks a lot for listening. Thanks a lot for liking or sharing or retweeting or whatever you want to do with the content, or simply listening to me for a while. Okay, guys, have an awesome one. Take care. See you tomorrow. Bye-bye.